SoFi just defied expectations again, gaining over 3% while the rest of the market showed signs of exhaustion. In a market where investor confidence is fragile and volume has dropped across many sectors, SoFi stood out like a spotlight. From a significant spike in trading activity to fresh analyst ratings and mysterious behind-the-scenes meetings, there's a lot happening under the surface. This script breaks everything down into one deep dive section, with every detail you need to understand what's pushing SoFi forward. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi ended today's trading session with a strong 3.25% gain, landing at $22.49 per share. Throughout the day, the stock ranged between a low of $22.49 and a high of $23.81. What makes this move stand out even more is the timing. SoFi surged just as the overall market started to stumble. That alone is a signal that something different is happening here. One of the most striking signs of strength was the trading volume. Over 119 million shares exchanged hands today, far exceeding the stock's average daily volume of around 82 million. On a day when most of the broader market was quiet, SoFi exploded with activity. That's not something you see unless there's something big driving interest. So what was it? First, let's talk about the analyst ratings that hit today. Deutsche Bank issued a rating of hold and placed a price target of $21 on the stock. That might not sound exciting, but it came from an analyst with a 65% success rate, which adds weight. On top of that, another analyst, Zudon, came in even more bullish with a buy rating and a $26 target supported by a 54% success rate. These aren't groundbreaking, but they help shape the overall sentiment. Despite these upgrades, the broader consensus among analysts still leans cautious, with the lowest projections sitting at $18.75. That would imply about a 17% downside from today's price. Historically, analysts have been slow to catch up with SoFi's performance, often trailing the stock's real momentum. That pattern seems to be repeating itself. Now let's talk about something that added a bit of mystery to today's price action: a closed-door meeting between SoFi executives and JMP held in Boston. There was no press release, no webcast, no transcript. Nothing was made public about the meeting, which is unusual for a company that typically announces fireside chats and presentations. Initially, many thought this meeting could involve a big acquisition or a game-changing announcement, but based on comments from SoFi CEO Anthony Noto, that wasn't the case. What Noto did share was a statement about the recent $1.5 billion share issuance, clarifying that it was a strategic move to increase the company's financial flexibility. This wasn't a sign of weakness or desperation. In fact, the deal was completed in under 24 hours, a highly unusual pace for a transaction of that size. Around 82.7 million shares were issued near the stock's 52-week high. That quick turnaround and the strong price level indicate extremely healthy demand from institutional investors. Noto mentioned that while the company is open to acquisitions in the future, there are currently no deals being considered. This may be the kind of vague, regulatory-safe language companies often use, but if we take the CEO at his word, there's no big M&A move coming in the immediate term. Instead, the company is focused on strengthening its financial position and adding another layer of security to its business model. But the action didn't stop there. After the regular session closed, SoFi dipped slightly in after-hours trading. This wasn't directly tied to SoFi news. Instead, it appeared to be the result of negative sentiment from Coinbase's earnings report. This shows how SoFi is starting to be indirectly linked to crypto sector movements. It's an evolving narrative, and traders are beginning to assign SoFi a higher degree of correlation with digital finance and tech. Meanwhile, Robinhood also had earnings this week, and the impact on SoFi was fascinating. Robinhood's management made it clear they wouldn't be pursuing a banking charter anytime soon. That statement removed a major perceived threat to SoFi's business model. Investors reacted quickly, and SoFi climbed higher while Robinhood stock softened. It's a prime example of how market psychology, especially around competition, can impact trading behavior in real time. Let's move to macroeconomic data. The PCE report came in slightly hotter than expected, up 2.6% year over year versus a forecast of 2.5%. Month over month, it remained flat. While these figures were close to estimates, they still lean toward the inflationary side. Jobless claims came in at 218,000, slightly below the 220,000 forecast. All in all, these numbers weren't too concerning, and they aligned with what we've seen from other recent data like CPI. The market didn't panic over this, but it kept a cautious tone. Another force at play: reciprocal tariffs are set to take effect. That fear has been bubbling in the background and may explain some of the broader market hesitation we saw today. Despite that, SoFi was one of the few stocks that continued to gain strength. On the short-selling side, things are beginning to shift. Yesterday, 1.82 million shares were returned by short sellers. That's a reversal from the previous day when short positions had increased by around 2 million. The current short interest stands at roughly 10.71% of the float, which translates to about 124.77 million shares. It's likely that we'll see a slow decline in short interest over the next few quarters. Not a massive short squeeze, but a gradual retreat as the stock gains legitimacy and confidence. Option activity today also painted a bullish picture. There was $64 million in call option volume versus $32 million in puts. That's a 2-to-1 ratio in favor of bulls. Interestingly, the bulk of this options activity occurred in the first hour of trading, hinting at big institutional players making their moves. There was significant optimism for SoFi reaching $25 or even higher in the short term. Whether that's hedging or genuine conviction is unclear, but it signals strong sentiment. Digging into Darkpool data, the institutional interest in SoFi becomes even more obvious. In just a few minutes, we saw huge trades: 6.2 million shares, 12 million, 2.5 million, 17.7 million, and more. These block trades happening in rapid succession show that big money isn't just watching, it's actively positioning. Today's market volume was generally weak, but SoFi defied that trend. In fact, week-over-week analysis shows that institutions have been pulling back from both equities and crypto, around $1.5 to $2 billion worth of outflows. Yet SoFi stands out as an exception. It's pulling in attention and capital at a time when most stocks are being ignored. Finally, the technicals also look promising. SoFi closed just above a key Fibonacci level at 22.57 cents. If it can maintain that support, the next range to watch is between $25 and $28. The stock is also above most of its key moving averages, and technical indicators suggest it's currently oversold, setting up for a potential bounce if broader data remains stable. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.